part 2 of investing. I really hope that you do understand how to buy low and sell high right now, because that's the fundamental of how you buy stocks and make money and profit, etc. But in today's video, we are going to learn how to make money when the stock prices are going down. And you sit there and think to yourself, what is this guy talking about? But that's pretty much true. You can also make money if the stocks are going down. Let me show you how. So normally we buy low right here and we sell at high, right? And we get the profit all the way up here. So we make profit. But we can also make profit if we sell here, and it goes down, 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 and any point from where you shorted at is a profit for you. Yeah, exactly the same way as every way here is profit for you. Yeah, but the thing is that in order when you buy low, you go long. When you short, you go short. Yeah, remember those two words. But in order to profit from a decreasing stock price, you simply have to borrow shares on the market that you do not own and take a short position. Then you will sell the shares in hopes of repurchasing them at a lower price in the future. When a shorter borrows shares from someone, he or she is required to return the borrowed shares at some point in the future. When you return the borrowed shares, if the price at which you bought them back, including fees of course, is lower than the price at you originally sold them, you will make a profit. And that is pretty much how you are shorting. So I'll show you an example. Let's say that you shorted, you know, sorry for this being Swedish, but this is buy, and this is sell. So let's say that you shorted at 300. You went here and you press this button. Instead of pressing buy, you press sell. So at 300, you press sell, and it goes all the way down to, let's say, to today's price. It goes all the way down here. Yeah, and what you have to do then is that you have to take 300, yeah, minus today's price, which is 190, right? And then what is it, 0.95 or something, yeah? And then what you have to do is that you have to calculate the difference. You get 110. So it went down 110 crowns in this case. It could be dollars, pounds, or whatever currency you have per share. So you take this 110 and you times it with how many shares you have. So let's say you had 500 shares. So you times that by 500, and that will give you about 55,000 or something, yeah? So that means that your shorting position would make you 55,000 crowns if you shorted here and bought back here. However, if you look at this picture, let's say you shorted down here for some reason. Someone told you that the price was going to go down or something, and you listened to them or whatever, you know, and you shorted right here at 135.8. And it went all the way up here at 300. Yeah. Then you take the 300, yeah, minus the 135.8, which will give you 165. So you take this 165 times how many shares you shorted. So let's say you shorted 500 shares. So times 500, which will give you a loss of 82,000 crowns. So you can see now why you should short when it's at the top, because then you will make money when it goes down, and you should buy when it's at the bottom. So you would have a loss here for 82,500 crowns. But if you were going to buy it instead, let's say you went and pressed this button instead, you press the buy button, like we learned on the previous video, right here, and it went all the way up here, you would make a profit of 82,000 500 crowns. And that is how you make money by stocks. In the next couple of videos, I will go into heavily detailed theory, and it's not that pretty. It's pretty hard. So make sure that you at least understand when to buy a stock and when to short a stock. Yeah. So we buy it right here, and we short it right here in order to make the most profit possible. And in some cases, if you are a day trader, you probably want to short it, right? If you would probably want to buy it, you know, depending how much money you have. But if you bought right here, for example, and you can sell it right here to make a small profit. But when the volume is not that great, you know, you can see the volume right here. It's better. I wouldn't say it's better, but in order for you to make a profit from this little distance, I don't know exactly how much it is. I think it's like 15 crowns or something. You maybe need to buy more stocks. So in order to make a profit from here to here, you maybe need 2,000 shares. Yeah. So that would be 135. So So this is the profit you're gonna make. So let's take 135 times 2,000, and it would cost you more. Let me see. It would be 135 times 2,000, which is 270,000 crowns. Yeah, and your profit would be 30,000. Yeah. So the more shares you have, the more profit you make, and the more money you lose if it goes on the other way. That's why you have to buy when it's low and sell when it's high. And that's why you have to short when it's high and buy when it's low. Yeah? And that is pretty much how it is. I also want to discuss the financial markets because I want to do it in the next video. So we have capital markets right here that we consider equity, stocks, bonds, mortgages, assets, securities. On the money market, we have commercial papers, treasury bills, and repurchasing agreements. And in the next following videos, I'm going to go into theory pretty heavily. And after the theory, I will go into how to calculate the expected return, the risk, etc. But more on that on later videos. And I wish you good health, and remember to subscribe and etc. So have a good day.